Welcome, Soul Family. Thank you guys so much for being here today. I love you guys so much. It is the 25th of June today, 8 a.m. We just got into the London session right now, and I want to give you guys a quick trade update and account update on the micro account flipping challenge that you guys know about that I've been going on. So, these are the results from yesterday, 24th June. If you watched yesterday's video, big W, guys. We got big W. Let's go. W's. W in the chat, baby. Let's go. W's in the chat. Yeah. So, it went pretty good. We closed $8 yesterday, which is pretty good. I guess we broke our own record, which is great. And yeah, so there was a whole lot of trades with all sorts of reasons why we took them. USD JPY sell, that was a hedge against these gold sells here because I sold. Wait, where's those gold? Yeah, these gold sells here, right? As you can see, $3 here. I sold gold at some point because it made sense to. The momentum was shifting in a sell direction because the US is strengthening in the long term because of the upcoming rate hikes. They're going to increase interest rates over the upcoming year, which is going to strengthen the US dollar, right? So, because of that reason, but also because it was shifting in that direction, there was room for it to go down, which we'll get into today's trades, right? So, you constantly have to adapt and change, right? Every day, every week is different, okay? So, anyway, so to counteract those sells, because I sold gold, right? That means I'm buying I'm selling gold and I'm buying USD technically, right? So then, in order to hedge against my USD buys, I need to sell USD, and because USD JPY here was at a position where the government, the Bank of Japan, is also intervening at those levels, trying to keep it below those levels. They're trying to keep the inflation under control. That's why I thought it would be a good hedge for my gold trade. And that's why I sold. But I had to close it before I went to bed because I was like, well, I'm tired and I'm no longer in the gold trade. I took the profit. Might as well get out of this trade now because I am not in any USD trades right now. So I'm not hedging against anything. Because my other USD buys were in profit, they were risk free, right? Like the break even was in profit, like my stop loss was in profit. So we were sorted there, right? So we took these trades here, guys. As you can see, AUD USD sells. Yesterday I was telling you the Australian dollar was weakening against the US dollar because of some fundamental data that was released in AUD. Same with GBP. They have some political instability because their minister resigned. So that's why we sold, and we might actually enter new. I entered new cells. I added new cells to GBP USD because we got stopped out on some of them. I think we've been taking the trade on Monday. Then we took the trade on Tuesday again. Like we took the trade on Monday, risk free. We went to bed, right? Some of them got stopped out. Took some partials. Some of them were still in, and then we did the same thing the next day. We entered new trades, took some partials. Some were still in, risk free, and now today I just entered new trades again because GBP retraced and it gave me an entry. I just saw momentum shift on the pound right now. I can show you guys on this trade I'm looking at on my screen. So over here, if we go to these GBP cells, oh, this is the one I took a while ago. This is the one I took on the 23rd, right? And then this one was the 24th. This one are the new ones, the 25th, right? So because I just saw momentum shift now back down, right? I saw this retracement which gave me another entry position to go down again, right? So now I'm unloading again, gonna do the same thing, right? And once I'm just gonna follow the momentum, trail my stop loss, and do that, right? Because we know that the smart money, institutional smart money, is unloading the GBP because they want to invest in the USD because it's strengthening in the long term, and because the pound is weakening because of political instability, right? So every retracement, they add positions, right? Every day when they have an opportunity to, they'll add positions, right? They'll unload their GBP basically because they want to maximize their returns, right? They don't want to hold on to GBP because it's losing value compared to the dollar, so they want more dollars basically, right? Because for them every little detail matters. They're dealing with huge sums of money, so like every little fluctuation in geopolitics, in geopolitical trade, has an impact, right, on their money. It could make them billions or lose them billions, right? So anyway, that's why I entered the GBP USD trade here for today, as you can see again, right? And I have my stop loss in a position here. That's where my stop loss is. I entered two positions, basically risking $5. And this is the 4-hour chart. So 1, 2, 3 previous 4-hourly candle highs, right, is where my stop loss is. So 1, 2, and 3. So that's where my stop loss is. So at that point, it's reversing, right? So I wouldn't want to be in that trade at that point, I guess. Like, it wouldn't make sense for me to risk more than that, because that's my rule, right? In order to be sustainable. Because, yeah, I have to know I'm only risking $5 on this USD trade, and then I know my hedge is also going to be similar, like $5 risk, for example. So that's the GBP trade for today. I took this gold buy as well, as you can see, right? And so, right, we have USD buys with this GBP sell. We have these USD CAD buys from Monday. Wait, was this from the 22nd? When was the 22nd, bro? Monday or Tuesday or something. Okay, Monday is the 22nd, guys. Okay. From Monday, these USD CAD buys, same story, guys. Because of USD strength, we've been trailing it and adding positions whenever we have the chance to. Although this is different, this is at all-time highs. You know, GBP USD still has room to like go down. It has a lot of room to go down. USD CAD is at all-time highs here, so, but we're risk-free, so it's one of our positions. So as you can see, I moved my stop losses here. So if it reverses, I'll just get out of the trade and take these profits here. And if it continues, I'll continue to follow it as I've been following it, or taking partials. For example, let me just take some partials right now, since um do I wish to take partials right now? Right? If I wanted to take partial trades, I could take 0.10 off the table here for the day and just go like that, and then boom, we've taken partials from this USD CAD trade, right? Because it's at all-time highs here, guys, so I'm like, might as well secure some of the bag for today if I forgot to, because instead of just getting our whole position stopped out here, for example, we could take some of it up here, you know, which is already the equivalent, kind of, like, yeah, so it makes sense. So that's our USD CAD trade. And then why did I end these USD JPY buys? This is a hedge against my gold trade. Why am I taking gold buys? My gold buys is a hedge against my USD trades, right? So I'm buying USD CAD, for example, here, but this is risk free, so it doesn't count anymore. We're not, because right, so we're not going to count that. GBP USD, I'm selling GBP, I'm buying USD. So now I have a USD buys, $5 risk in USD buys, right? Now I need to hedge that in some way. I need to look for a hedge. So I could do USD JPY sells as my hedge, right? But I do know that the USD is pretty strong against JPY, and it is also there's a level. It's pretty up there, right? It's pretty up there. It's already at like all-time highs, basically, right? So, and the Bank of Japan, right, is trying to keep the levels below 161.85, right? But the data is saying that the 1% increase rate hike might not be enough to like combat that the USD hawkish Fed, So now that's why I use this as a hedge instead, because I'm like, I don't want to sell gold, right? Because I'm like, damn, gold long term is, I just don't feel comfortable selling gold, right? Even last week, I was like, we might have to challenge the gold sell bias, because even though it's a safe haven asset, it also has industrial use, right? So in the long term, gold has always gone up. Like, the long term trend of gold is like going up compared to any currency, right? So that's why I just don't feel comfortable shorting gold. Yes, right now USD may be strengthening, and to trade it may be a good idea. Maybe you could get a gold sell, but I just don't like trading against gold's like fundamental bias of long-term buys. I'd rather be on that side of the equation. So if I want a hedge against USD, I wouldn't want to sell gold and buy more USD. I'm already buying USD. I'd rather buy gold as a hedge against all the currencies that exist, a hedge against inflation, a hedge against, yes, some of the, like, it is a hedge, it is a good hedge. It's like someone might argue and debate that, hey, they might want to move their money out of gold because it's just sitting idle, but it's not sitting idle. It's actually doing more than sitting idle because it's fighting inflation. It can beat the stock market in so many cases. It has industrial use, right? It's used in technology. So gold has some fundamental value as well, right? Sure, currencies have fundamental value too, right? They have governments, they have economies, they have people. But I just don't like selling gold, guys. So one of my AI, that's why you have to have discernment, guys. Your AI agents are going to give you conflicting trades, conflicting data. So you have to look at the charts, you have to look at the momentum. And when the technicals and the fundamentals align, the momentum, right? Then you take the trade, or you might get multiple confluences, for example, right? And it's okay, you win some, you lose some. Sometimes you're wrong, and when you're wrong, you have to accept that you're wrong. For example, I can't be right about both selling USD JPY and selling gold, for example, because they're inversely proportional or something, right? Because I'm selling gold and I'm buying USD, and then so they it's a hedge, right? It's a hedge. So obviously I can't be right. Well, it's interesting. I'm just saying, when you're wrong, just cut your losses short. You know what I mean? Like, it's difficult sometimes, but it's a skill in and of itself, right? So I decided, you know what? I'm going to go with gold buys instead as my hedge for the US instead of USD JPY sells right now. We could change that because two of my AI agents right now are telling me to buy USD JPY. So I actually add that to my USD position. So that is why that's the logic behind my current trades right now, guys. That's the logic behind my current trades, right? Because earlier today, I just saw, and I had an entry for gold buys, right? Because I saw this H1, I saw it respect these levels, right? I'll show you in a moment. I saw it respect these levels here, right? Because that's what I'm saying, guys. Gold is just interesting, right? And it respected these levels, and then it went up, it broke back in here, and then it broke past this high here, and again it broke up. Maybe I could have waited for it to break past this point, but on the 30-minute it broke past here, and I entered. I was like, let me enter, and then boom. So that's why I entered my position right there. Okay, so anyway, I have hedges, so I'm okay. That's why I have these hedges as well, right? So I'm buying gold, I'm selling USD, but at the same time, I'm buying USD on the other side, right? So it's interesting, guys. It's trading, right? Arbitrage, having multiple baskets, knowing when to offload, how to follow the momentum, how to ride the waves and whatnot, and etc. But anyway, thank you guys so much for watching. I love you guys so much. Adios, mi familia de sol.